Hello and welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the live trade room as we are about to see what opportunities we have during the US Open, and we're looking to trade those opportunities fully live and interactive. And what we're really doing is looking for high probability trades across some of the world's largest markets, from your foreign exchange to commodities and also global indices. So we want to make sure we have that multi-asset class view of these markets. If you are genuinely interested in learning how to trade the financial markets, and you get a bit of a look inside in terms of how we approach these markets and how we identify these high probability trades, that we can absolutely help you gain some consistency in these markets, in your ability to generate consistent returns, but from a perspective of, I suppose, knowledge and understanding of trading markets. Okay, so without further ado, let's see how much cash we can make in today's session. Let's bring up, as we always do, our risk warning. Just take a brief moment to familiarize yourself with our risk warning. In the meantime, I'm just going to get up FOREX Factory so we can have a look at the news flow, see what see if there's any major high impact news events that are likely to impact our trading. So this is currently up on screen now. So we go down to, of course, the 1st of April. So So the only real news for the day, and we must be mindful, it is a bank holiday in New Zealand and Australia as well. So, mind you, the Asian session was relatively volatile, I guess, to a certain degree. It's certainly quieting down in the European session just a little. We've had a number of European manufacturing data points released today, so again, this broadly maintaining that broad positivity as far as manufacturing is concerned. If I could just take a little step back, we had President Biden speaking with regards to his over $2 trillion spending bill, infrastructure bill. So it's got to go through a series of phases. It's I suppose it's a bit of a headline rate and a bit of a wish list at the moment. We'll see how it gets pulled apart over the coming days and weeks. And broadly speaking, it's quite a positive. Obviously, we're talking about additional stimulus on the fiscal side, as well as all the monetary policy stimulus measures that are currently in place. So we are in, I suppose, this stimulus-based environment. The major news for the afternoon, which we'll just have a quick look at the gold markets. So we'll have a look at the price of oil at the moment. It's very much expected for OPEC to maintain their supply cuts. So they were going to increase last month and they refrained from doing so. It's likely to maintain that same position as things currently stand. And I'm just looking at the oil price again now, and it's just rolling over to the downside fairly recently. So we'll see. There may be an opportunity in there actually in just a moment. So, but we want to be mindful of this news event just in case we get ourselves offside without any due diligence carried out. So we want to make sure that we try and stack the odds in our favor when we trade these markets. We do have an ISM manufacturing number out of the US. Again, we're in a period of growth, so it's very likely to be in and around that sort of 59.2 figure for final manufacturing ISM manufacturing. Okay, so let's have a look at these trades then that we've been looking at really for the last couple of days. Certainly we were discussing them again on our trade plan webinar, which we have every evening at 9 p.m. For more information about any of the products and services we offer traders, then just go to a website. It's just there up on screen, the live trade room, all one word, .com, and we'll the livetraderoom.com, and you can connect with us as well through our website as well if you have any further questions. Okay, so up on screen you can see the series of markets that we've been looking at. HP just stands for high probability sell trade. Below that 1721, we're effectively kind of drifting sideways really. We've attempted to squeeze lower. Broadly sideways move for the euro dollar, but with still a bearish bias, so that must be said. The dollar yen, we're looking for a little break above this high just sitting in here, which would effectively be the 1100 level, so it's a nice strong. What I'll do is I'll just take note of this range. So if I just get up my pen, actually, I'll just share with you the from a price action perspective. We've got a clearly defined ceiling, and we have this sort of narrowing of price action to the upside, as you can see. So really, will we get a breakout above the 110.84 to the upside, or will we probably break through these levels?
10 minutes until we get the US Challenger job cuts year on year for March, a prior of negative 39.1%.
So we'll keep an eye on that. We do have our squawk running as well, so we can we'll leave that running there in the background. Yeah, the pound, we're looking for this market to be breaking before this level, and it's really failed to kind of close below that level. There's still a viable opportunity. It's a little bit lower, 35.53. Well, it's the 37.50 level really is what we're looking for. And really all eyes are now on tomorrow's non-farm payroll numbers. So that's the important news event for these markets tomorrow. It is shrouded in, I suppose, difficulty really to a certain degree, because tomorrow we've got a number of bank holidays, and it is also Australia, New Zealand, Switzerland, Germany, the UK, Canada, all have bank holidays. So the vast majority of the G7 will be having a holiday. The US market will be fully open, as will the rest of the European. It's just the big players will be taking a bit of time out, and we do have non-farm employment change numbers. If I just take you to Wednesday's ADP number, it came in relatively close, in line with expectations, 552. We saw sort of 30-odd thousand jobs less than anticipated. So will we see a similar kind of figure? We're looking for 652. Within the realms of this figure would be actually probably quite a positive figure, where all eyes are really focused on the jobs numbers. We're likely to get some significant volatility. How long lasting it is, and whether we will get a reaction, I just want to just share with you really the distortion that we're seeing in these markets, as a result of COVID. So by no means are we in normal territory, and we've got different figures coming from different sources, and how true and reliable the figure is remains to be seen. But still looking for a real significant figure. That if you look at the actual, last November we were around the 600,000 levels. We've had a very, very serious dip to the downside from a jobs number back in January, and now it looks like we're kind of coming out the other end. So we went from minus 140 to a positive 50,000 jobs added to last month, which is 379, and it now looks like we're going to increase again. as this rollout is performing quite well, squeezing up to the 600,000 job level once more. So obviously we're gearing in towards the Easter holidays, so we need to take a lot of this into account. So the Aussie dollar, we had a nice little move overnight to the downside, followed by pretty significant pullback, I guess. The overall bias in this market is very much to the downside, so we'd expect further continuation, and we're now in this little tight range here for the Aussie dollar. So let me just cross-reference last night's trade plan and make sure we've got them all up on screen. So the euro dollar, the dollar yen. Yeah, we'll just swap out the. So we were anticipating sort of further pound strength really, but that's kind of failed to deliver to a certain degree. The Aussie dollar we like lower, the dollar yen we still like to the upside, and the euro dollar we still like lower. So we're just drifting into these sort of sideways moving patterns really. Pound dollar, just keeping an eye on the US indices markets and on the right hand side gold, but we're really pushing back to the previous monthly lows there. So as a result, we can probably remove that one. And just keeping an eye here, as we can see on the crude oil market. So we've got OPEC, and you can see that the markets are not reacting that great. We're seeing, fairly consistent rollover price action to the downside. We've got this little handle in here at the 58.90 level, and then the further low is the 57.24. So we'll just see how this market just interacts around that 5900 level.
So moving into 3 minutes for this US Challenger job cuts year on year for March, prior of negative 39.1%.
Okay. There's all sorts of concerns in Europe regarding the vaccine rollout, so that's likely to weigh heavy on potentially the euro itself. Let's see how it compares and contrasts with the euro pound. It's just we do need to be really patient with this trade. We have been on and off for quite some time now, so that patience will hopefully really pay off, where we're continuing to make lower highs. So that's an important factor in a market that is trending, is to make a series of lower highs and for the most part lower lows. This is a little bit of an anomaly down here, but we can see that the general sort of flow of capital is very much pointing to the downside, and that's really why we're looking to see for continuation to the downside. We just need to be just more patience really. We've mitigated risk on the trade. No, sorry, apologies. Let me take that back. Below the 8500, we're mitigating risk on the trade. So at the moment, we're straddling the previous month's low, where our entries below it and our stop losses above it. So that's kind of what you want to see from a technical perspective, is to see that kind of continuation trade like we've seen in the last couple of months. And if I take you back to perhaps 4 months ago, where you get that important break below the low, where you're getting that monthly low, you're in line with that 89.23 level, and you get a really nice continuation move to the downside. Same again at the 88.09. What month was this? This is February. Nice continuation to the downside below that level, and we're at that same level as things currently stand. So this month it's been really slow and grinding, but as you can see, not as much acceleration than previous month, and now we're looking for the same again at this level. So really that's what technical analysts do. They sort of look for these patterns, and they look to include that in their analysis when they engage with these markets. The market's very much in this downward spiral. We just got to be patient down at these lows, with a view to give it a little bit more time.
Negative 86.2% for the Challenger job cuts year on year. Negative 86.2%.
This is that Challenger job cuts. It's a year-on-year figure. Negative 86.2. Challenger job cuts. So it's the change in the number of job cuts announced by employers. Okay, you can imagine that would be broadly positive. So in the US and Australia, these markets are closed for Good Friday, as it is across most of Europe and Canada and a few other jurisdictions, Germany and Switzerland. So we're probably likely to see a little bit of a slow end to the week as a result. But we do need to keep a close eye on the in the oil markets to see if we get any sort of coherent move to the downside for crude oil. So it's just bounced off that low, the 9,500 level, as you can see. So what we'll do is we've got 30 minutes before the open, before we get some US cash being plowed into these markets. So we'll have a quick flick through, we'll identify, and we'll just, I suppose, discuss a little bit. The opportunities as they unfold, and it's always better to get, so conducting multi-time frame analysis is always really important. Generally speaking, you want to go in the direction which the market is moving. There is some caveats to that on occasion, but at the moment they're looking sort of mildly bullish, but there's really not that much commitment to the upside, as you can see. So as a result, it needs to be then a market that you're wanting to hang in there with and see those rollover trades to the downside, which is what we were discussing yesterday. So the quality of trade in euro dollar is not great today, to be fair. Same situation for the pound dollar. So it looks like we're getting a little bit of positivity in the dollar yen, so we can absolutely have a look at the dollar yen. The dollar Swiss we can certainly have a look at above this high. You see, we want to keep an eye on volatility as well. So if there's limited volatility in the session, you're probably likely to get consolidated price action for longer. So you don't necessarily want to get into a trade and just have to sit through it for long periods. So dollar CAD, a bit of a bid in the dollar CAD, but really for nearly 2 weeks now it's only really drifting sideways within a narrow range, 126.26, and let's bring this level down just a little bit, and let's say 125.57. So we're only talking about 60-70 pip range for the dollar CAD. So we'll keep an eye on the Aussie dollar. We do want it to break below this red line here, the monthly low. So we'll see if we get that move or not. New Zealand just drifting sideways, isn't it? So again, we can put a fairly tight little box. So for 6 trading days, this market has just moved sideways. And that's been a bit of the problem really with the dollar over the last few days, is that for most markets it's not really done an awful lot, although it's maintaining its potential bullish backdrop. So today these highs are just bouncing off these previous lows, which is what you want to see. So you just want to try and give it a bit of time and see if we get that rollover price action to the downside. It doesn't look like there's an awful lot happening that quickly. So the euro yen, we do like it above the monthly high, the 129.99. We're not quite getting that move just yet. And same situation, just that these highs just in here. So the euro pound actually below the high probability trade is the 85.01, and the pound yen is actually the 152.76. So we're not too far away from those. Maybe we'll just look at the euro yen, sorry, the pound yen, should I say, in a little bit more detail. So gold is finding a bid. It's just this little arc. So we were kind of net sellers at 17.15. The price bounced off these strong levels of support down here at the bottom, and has sort of rallied, and now it's potentially creating a bit of a W formation. So this is what we'd be looking for. Markets flush to the downside, pull back. And then when we see that, this would be a structural change to the upside for gold. In around that kind of area there. Okay, so gold pushing higher, crude oil. It would be important to keep an eye on crude oil just this afternoon. So we'll have a look at that, although literally nothing is happening. And then the equity markets, they're quite bullish off the back of potential a positive jobs number and a really effective rollout of the vaccine. And now we've got the stimulus package as well. So these are now sort of very little response from Dow Jones, which is interesting. Mildly bullish in the FTSE. The DAX is continuing to grind higher, and the yen is showing some signs of bullish price action there. And to just complete the roundup, really, just Bitcoin is very close to its $61,000 highs. So very impressive move, as you can see. Now there's every anticipation we will get new highs in the not too distant future, but it's just hold it. It's just a bit held up below that $60,000 level, which is a very important level for these markets. So so there's a bit of a bid in the Nasdaq, so we'll add the Nasdaq, which are largely, you know, as there's further restrictions being rolled out across Europe, and as a result, it's the Nasdaq is a kind of a net beneficiary of that, just largely being tech weighted, and the more people are at home, the more access to technology is realized and benefits proportionally the Nasdaq as a result. So we can have a look at the Nasdaq. So that's going to be, I suppose, our plan for the session. So we'll get these trades up and running. So let's start with the Euro Yen, Dollar Swiss, Aussie Dollar. We'll just stick this over here. And the pound yen. So let's see what sort of action we get in these markets over the course of this session, and then let's put up crude oil because of OPEC, and let's see if we get some volatility maybe today in crude oil. Yesterday's crude oil inventories are very much in line with expectations, pretty much a slight miss, but nothing of any major concern.
Reuters, citing sources that the new Turkish central bank governor told investors that current high inflation requires tight policy.
Okay, just looking at most of these, we'll have a look at the Dollar Swiss, the Nasdaq in a little bit more detail perhaps first. So let's go in and we'll see what's going on the smaller time frames. So you can see we're on this little rebound trade, and it's not surprising to get, you know, these little periods of sideways moving price action. We're in another one up here, and the market eventually pushes higher. We'd be looking for the same again, a little breakout of that level, and that would be regarded as a high probability trade to the upside. So so let's do some more analysis on this price action here. Okay, so as you can see, we're in this up and down type price action in here, a bit of narrowing, and the 13,252 is your high probability buy trade, so that's the level at which we would be interested. Above the 13,252. Okay, and let's just make this as big as possible. So So it's just up at these highs just in here. Tell you what I'll do, if I can zoom in a little bit more. Okay, so it's just above that level, just there to the upside. Yesterday we were looking at buy trades. We failed to get that constructive break above those highs. So as a result, we were looking for prices to actually roll over and break above the 61.18, and it just fell short today as well. It failed to really get above those levels. Okay, dollar Swiss next. Let's look at it on the smaller time frames. So you can see how messy it is. We were failing to make new highs, and then we're rolling over to the downside, followed by further momentum to the upside. So it's a bit messy, and there's a significant amount of, I suppose, up and down price action within this zone. But what we can determine is prices are pushing higher, so we'd be looking to go with this market condition to the upside. Dollar Swiss to the upside. Okay, and let's so we're looking above the 94.71 level. Let's see if we can amend this. So high probability buy trade above . So high probability.
Fed's daily here via Axios says that Biden's infrastructure plan boosts growth.
Above 94.71. 94.71. Okay, there we go. Let's look at this pound yen trade, see if we get that move through that market or not. It just bounced off the high just earlier, which is really, why we use support and resistance, because the daily high can be a strong level of resistance depending on the move. So So we're edging closer to it. So really a breakout above that 152.76 is a high probability trade to the upside. 152. $152.76. So this is a high probability buy trade above. So what you're getting up on screen is a breakdown of the markets which are likely to give us the best opportunities. So there's your trade selection: Nasdaq, pound yen, dollar Swiss. So you get the market, you get the direction, and you get the levels at which we regard them as high probability trades, and that can set you up for the best sort of possible opportunity, really. Of course, how you trade them, you're all trading your own capital, so that's very much down to yourselves. And you'll see certainly our traders will get notifications when we get into these trades, so they'll be notified that they can have a look at this type of trade, for example, and we explain the reasons why we get into our trades.
So Reuters citing two sources here that a senior Turkish central bank official told investors in a call that there will be no premature rate cuts.
Okay, so we're just monitoring the crude oil market just to see what's going on with OPEC. We'll certainly see it in the price action, and at the moment it's looking quite negative. If that turns around, we'll see that in the price action. So unfortunately it's above that 1100. So that buy trade unfortunately remains intact, and we're inching closer to it. We're only sort of 20 pips away really from the move.
Some research from Deutsche Bank here raising their forecast for UK GDP growth for 2021 to 6%. Deutsche Bank here increasing that projection by 0.3 percentage points to 6%, saying it's based on strong base effects and a better expectation for a Q1 and Q2 rebound as household consumption returns.
$85. So this is our trade plan for the session. In fact, we can work with the monthly low actually instead. So it's the 75.63, and we're just above that. So 75. Let's put 63 in there. 63. So up on screen you get our high probability buy or sell trades. Okay, so we're looking for the dollar yen, the dollar Swiss, and the pound yen to push higher, and the Nasdaq. We'll keep an eye on crude oil, and we're looking for the Aussie dollar to actually sell off below that 75.63 level. And as you can see, we're just above that level as things currently stands. So that's with the US Open now in 7 minutes. So we're fully prepared for those opportunities. We'll get a little update on OPEC shortly, and we'll keep an eye on the price action, and we'll see what what happens to that cash when it comes in from the US side. Price is just rolling lower below that 94.71 in the dollar Swiss. They're all either daily time frames or they are 15-minute time frames. Which basically means the 15-minute time frames could be fairly imminent. The Aussie dollar and the crude oil, we can look at them on the daily and see when that begins to shift. See if prices do break down below that 75, 60, 62 level. And the same for crude oil if that rolls over to the downside. There might be a short-term selling opportunity in crude oil. But we just need to be mindful of OPEC. So along with Biden's infrastructure bill, he's looking to pay for it with increased taxation. And one of the proposed changes to the tax code is actually increasing corporation tax. So I think it's around 21%, and I think they're talking about pushing it up to either 26 or 28%. So let's see how those get thrashed out. They're probably going to go in high and settle for something in between. We shall have to wait and see. So, I mean, it's no major surprise with tomorrow being Good Friday, where a lot of bankers around the world will be taking a few days off to have these kind of slower market conditions. So, we're certainly not rushed off our feet for opportunities at the moment. We just looks like we do need to be a little bit more patient. And wait for the right opportunities to come to us rather than trying to work really hard to find really poor quality trades. So we're in no rush to do that. Okay. So let's see how these markets react now on the open in just a couple of minutes.
pays and I put in the Morgan. That's why I'm sitting at the top.
Okay, so we don't really have too much news to work with. As you can see, kind of 130 building, Canadian dollar news, unemployment claims. It's the ISM manufacturing figure at 3 o'clock UK time, could be somewhat eventful. Apart from that, nothing really to move markets. The OPEC news event might impact crude oil. Probably ultimately likely to support if the market... Right, okay, so if we hear that they're going to maintain the supply cuts for another month at least, and the supply, so there'll be restrictions on the supply side, but if the demand side is hit further, largely due to the rolling out of these new lockdowns, then we can expect these prices to roll lower. So if there's a mismatch between supply and demand, then that can actually move further to the downside. So it is quite an important decision for crude oil, because that's pretty much what they need to weigh up. Can they meet the demand, or perhaps have increased demand above supply is always likely to push prices of crude oil higher. So let's see.
That's the important thing, never to be owned. Money's the cheapest thing. Liberty, freedom is the most expensive. No, you're doing good.
Okay, so just looking at these markets, there is potentially a move about to kick in on the Nasdaq at further upside price action there. We'll just see if that closes. Just have a quick look through the others. So we're almost at these all-time highs once more. So it's just quite a positive outlook now. Okay, so we've got so just do a little roundup. We've got our live trade room with our traders now shortly, so I will have to let you go. Let's get all of these markets back. We're not blessed with huge volatility today in terms of direction, and the Nasdaq is by far the most interesting one, or very close to breaking above the 13,252. So we could get a decent opportunity there. And then crude oil is just ticking to the upside now. So we've got a stop loss here at 13,209. Our entry would be 13,252, 253 potentially. So 252. So we're talking about a 45 point spread for the Nasdaq in terms of a stop loss. Let's see if we get prices breaking above that level. So we're just expecting further upside from this little breakout. The prices are just rolling back off that 13,252. So these are levels of support and resistance that we're looking to take advantage of. So so a bit of dollar weakness again, like today. It looks like that's what we're getting. We don't have anything comprehensive across the yen pairs. Crude oil may continue to roll lower. We'll keep an eye out for that, especially below the 58.80, and the Nasdaq and the US equities look like they're comfortable pushing further to the upside. So we're going to look for that buy trade above 13,252 level. So look, I do apologize. We need to shoot off at this point. So we'll keep you updated. And certainly our traders will be notified once we get into trades into any of these markets. But do bear in mind that we do have fairly quiet market conditions tomorrow. We've got non-farm payroll figures out in the afternoon, so we'll see how we get on with those. But we just have to trade the conditions rather than be that eager to be jumping in and out of trades. So we'll wait for the conditions to suit the opportunity, if that makes sense. So on that note, thank you very much for joining us. Do take care, and we look forward to seeing you again next week. We're off next Monday for Easter Monday, and I think we're pretty much back next Tuesday from 12 o'clock onwards once more for the remainder of the week. So from everyone here at the Live Trade Room, thanks very much. Happy Easter. Have a great, hopefully a great long weekend, and we'll see you next week. For everyone here, bye for now.